Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues to press on to the top side but still struggling to break through that level of 64.5. In light of the pattern though, the RSI is remaining above the midway point, so therefore we should not rule out further tests towards that region. A break there would see further scope up towards the region of 65.35, but I feel the market's still likely to be contained in a 63.5 to around 65.25. Looking ahead to this week, it is a blockbuster week of economic data, and therefore the market will be keeping a very close watch on the US CPI number, and then following that we get the US Fed rate decision. And furthermore, we got Super Thursday with the Bank of England expected to raise rates by 25 basis points, so the market will be very volatile this week. Therefore, looking at the euro, the market was a little bit to the mixed side as it attempts to recover. As you can see here, we are trading around 106.70. I still feel there is a little bit more downside and therefore could see a move anywhere closer to that 105 before rebounding due to the recent break on Thursday. Still, the dollar index, which measures the greenback strength against a basket of 6 major currencies, is trading around 105 and no doubt could see a little bit more weakness in terms of the fact we are pulling away from the 6-month highs, but still nevertheless with this week's economic risk, the market is most probably going to be very volatile. Although the Fed is expected to keep their rates on hold, there is very much hawkish potential, that is, as seeing a rate rise in November. But overall, September, November and December, out of the 3 months, there is 2 pauses, that is September and December, but possibly a hike in November. Also, the Bank of Japan is expected to keep rates on hold, but as we edge higher, a clearance of 148.30 could see a possible intervention. Like previously seen, the market was very whipsawed or close to that 150 area. At present, the bulls are not backing away as we're now in towards the 5th consecutive upward test, and therefore let's see if we do break 148.30-35 or see a rejection. A strong rejection could see the move back to 144.5. So with the Bank of England expected to raise rates, could see a little bit more in terms of whipsaw price action, but closer towards that 123 area, I feel the market might find demand and stage a recovery from this area and see a rise back towards this trend line somewhere around 125. Wrapping up with gold and oil, well, the market posted a very strong close on Friday after the hammer that was posted on Thursday and now looks towards that top side of 1,928.30. If we do see a close above there, then I would see a squeeze up to 1,950. In light of the pattern, though, it is a little bit firmer after these last 2 days of strength, but we do need to see a break above 30 to support the upside. Otherwise, the risk is back towards the bottom side around 1,886 to 88. Oil also pushing higher and now getting extremely to the top side of overbought conditions, and therefore could eventually see a retreat anywhere from around $91.5 to $92 a barrel. If so, a break of this trend, which is around somewhere of 88.25 to 88.5, then we may see a further slide down towards 84. So do keep an eye on that trend line, because overall the ADX is overheating and we are extremely overbought. Well, that's a wrap for the start of the week. Thank you very much for joining me, and as always, look out the interest rate report. I hope you enjoy the rest of the day.